The first book I tell everybody to read when it comes to personal finance or investing in Morgan Housel's The Psychology of Money. And the reason being, proper investing is about the right mentality and psychology and emotional aspect to saving money and investing. You can understand the numbers till you're blue in the face. But if you don't do the right things at the right time, you are going to be screwed. As an example, when stocks are falling, it's very, very likely that the people who believe they would love it would get scared and say, but wait a second, right now, this is the reason why the news is bad. Guys, I'm gonna pull up the S&P 500 SPY index, and I'm gonna show the numbers going back to 1993. This is very simple, guys. If I told you right now you can only buy 3 times in history, what would you pick? You'd pick here, here, and here. Now, these 3 times are terrible. The world looked like it was coming to an end for sure here and here. And this was the tech boom bust when people were like, listen, you're just not gonna make money in stocks, stocks suck. But these ones were the great financial crisis and COVID. And literally the world looked like it was shutting down and all finances were going to crap and everything. So Morgan Housel has a great, great quote. All past declines look like an opportunity and all future declines look like a risk. So like I just said to you, you wish you could go back in time and invest here, here, all along here, and here, right? Wow, what an opportunity. But for those of you who experienced these times, this looked like a risk back when you were experiencing it. All future declines look like a risk. When you think about the future and you think about the stocks falling 50%, nobody wants to believe that stocks could fall 50%. Nobody in this world wants to believe that. I personally believe that by the end of this, the S&P is going to end up in the low 2000s or high teens. Does that sound alarming? I'm not a fudster. I'm not trying to put fear, uncertainty, and doubt. All I'm saying is we're currently 70% overvalued based on historical S&P to GDP ratio, going back to 1929. I'm not saying it to put any fear in anybody. I'm just saying, listen, when stocks are very high, you're going to make less return. And eventually there'll be something that causes a trigger. But I want you to subscribe to our channel and understand that I want you to look at the future downs as the past opportunities. These look like major opportunities. You wish you could have bought all along the way here. And it's impossible for you to have bought exactly at the bottom, right? Impossible. But if you dollar cost average and you buy all the way down and all the way up, you're going to make a lot of money. And you can look at the future declines as the opportunity that you need to view them as. Now, if you look back at our channel over the last 2 years, we sat there and we criticized a lot of stocks going, these don't even make sense. These are hype stocks. But they kept going up and people said, Paul, you're wrong. You don't get it. I get that a lot less now. Now, are there still people? Of course there are. There's always going to be as we grow our channel. However, you look at these things saying eventually the cream rises to the top. But even the cream companies are still going to go down in value. Look at the high for Microsoft versus where it's at today. Look at the high for Google versus where it's at today. Look at all these great companies that were untouchable just 2 years ago and where they are today. And look at the crap companies, the ones that didn't make money. I just saw something interesting the other day. I believe it was, there was some electric car maker that in their SPAC offering said by this year they'd be making 50,000 cars a year. Last year they delivered 1,460 or some absurd number like that. And we just always said to people, guys, you've got to be careful when companies are promoting themselves. You've got to take it with a grain of salt because of course you're not going to sit there and say, you know what? It's very unlikely that we hit these numbers. We kind of suck. No, they're always going to speak optimistically. That's just the way it is. But I want you to program yourself to not care about what they say. I want you to program yourself to think about the future in terms of being an investor and buying into a company at some price today that makes sense as they grow, as they get better, as they make their balance sheet better. I want you to also invest in the S&P 500 and look at these times as great times. Because guess what? When we have these in the future, which I assure you we will, the news will be worse and worse. Oh my gosh, look how bad the world looks. Prime example, look at Meta. When Meta hit $88 on November 4th, everything was about how terrible Mark Zuckerberg was, how awful he is. Meta goes back up to 200 and now it's Zuckerberg's doing a great job. They're doing all these great things. Guys, the news will follow the stock price, not the other way around. The news will follow where stocks are going, not the other way around. Because when stocks are going up, Nobody wants to read that things are looking bad. They want to sit there, keep that momentum going. But the same happens when stocks go down too. When stocks go down, the news is going to follow this and make it seem like there's nothing good coming out of this world. Look at Alibaba. Alibaba is a company that I talked about for a long time, and it's going to be a multi-year play. But when it's up, it's like, oh, Baba's doing great. When it's down, it's China's terrible and it's going to be awful. And that very well could be the case. However, I look at it saying, do I think Alibaba will be around for the next 10 or 20 years? The answer is yes. Do I think they're going to make more money 10 or 20 years from now versus today? The answer is yes. So the final and most important question, can I pay a reasonable price for Alibaba today that it will allow me to make a great return on my investment? And that's when I use our stock analyzer tool. If you're new to the channel, or if you've watched this a few times and haven't subscribed, subscribe to our channel, because when things look the worst, we will be the rational people in the room saying it's not as bad as people think. Rarely is anything as good or as bad as people think. So subscribe to the channel, helps us out a lot, but it's going to help you out tremendously if you like the thought process of thinking differently than everybody else. Thank you very much for your time.